Hello, lovies. So, welcome to the More to Life Challenge. Today I went live in our Facebook group to talk about crash strategy. Strategy for an economic downturn or market downturn, and are we actually ready for it? Now, for some of you who have joined our challenge, brand new, haven't yet started investing in the stock market, guess what? This is going to be great news for you. And for some people like me who are already invested, I'm going to talk about what I'm doing on this journey to actually readjust my portfolio and prepare so that I can maximize the gains. I'm a long-term investor. I'm not a short-term investor, but there are some adjustments and things I'm going to do to take some of my profit and put aside some cash so that I can maximize the opportunity. The reality is stock market crashes make millionaires and billionaires. Have you ever noticed that the elite and the millionaires and billionaires make more money even in an economic downturn? That's because they set themselves up for success, to take advantage of the drops and reap the rewards and gains as the economy takes off again. So that's what we're going to do. That's what I'm going to do, and that's how I'm going to hopefully reestablish and play catch up with my retirement fund. So stay tuned. This is how we get more to life.
Show me the money. Save my money.
The reality is that a stock market crash or a down economy is something that we can all capitalize on, especially for people like you and me who are trying to get ahead in life, get more out of life, or in my case, reestablish a retirement fund. So I'm really looking forward to it. You know, this is good news. Anyway, let's talk about the strategy for ordinary people to get ahead. And at the end of this video, once I talk about the different strategies that I'm going to apply, I will talk to you about some very specific buys that I'm making. News today, gosh, so much has been happening. So the Federal Reserve Chair, Jerome Powell, was reconfirmed this week, and that kind of sent a little turbulence into the marketplace. A lot of people are expecting that interest rates are going to rise, but we know that he probably has a deal with the Biden administration not to raise interest rates before Christmas. Obviously, that would be a disaster to Black Friday and the, ramping up and reemergence and rebuilding the economy. So already the Bank of Canada has talked about raising interest rates, but we know that we generally follow the US market anyway, so that doesn't really seem to be happening right now. It's going to happen though. It's going to happen because Jerome Powell has already declared that he is starting the tapering, and that means less and less stimulus money going into, they're not printing money, they're not buying bonds, they're not doing those things as much as they were during the height of the pandemic. So interest rates will go up. The stock market is going crazy. It's going crazy not knowing what to expect. Now today, the news was the Delta variant and, the new strains that are now affecting vaccinated people. They're tracking them all over the world. This throws a lot of uncertainty into the marketplace. It also means that we are going to see some ups and downs. The new variant is an unknown. It's not exactly a crash the way we saw it in March 2020 when, nobody knew what was going to happen and we went into lockdowns and shutdowns of the entire economy. But the fact that airlines have now stopped flights to certain places, and probably that'll continue, and we now have to ramp up tracking of a new variant, this is going to cause a lot of uncertainty in the market. Again, not necessarily bad news. The question is, are you prepared? Because there are some crazy coming times, and so I'm going to share with you my strategy on how I'm preparing for that and hopefully maximizing that opportunity for myself and my future retirement. This, again, it's not financial advice. This is just me sharing my journey. I'm not a financial advisor. You must do your own research, and I can also help answer some questions or guide you to where I do my research. So the first thing you want to do to get prepared for a down economy or interest rate hike or a crash is pay off your debts. Pay off as much debt as you can, because as interest rates rise, it doesn't matter how much you've invested. if the interest rates are actually eating your money faster than the money you're gaining investing. So the first thing I did was I paid off my credit card. I had a balance that I had been accumulating on my credit card, and I had a big contract come in, and I just wiped that credit card out. If you can't completely pay off your credit cards, then consider moving them to a lower interest rate. So consider consolidating them. Consider a line of credit. And I have a line of credit, for instance, that's a very low interest rate. That's where I buy my vehicles. When I buy a new vehicle, I do not finance it through the regular vehicles, because, I buy used, and that usually costs a whole hell of a lot more. You're paying really exorbitant interest rates. Instead, I have a line of credit which has a low interest rate, and that's how I buy my vehicles. So my bike, my motorcycle, my car, everything goes on that line of credit, and then I pay it off just like I do a car loan, but it goes to me, and I save money in the long run. So here's the thing. When can we expect interest rates to rise? Well, I've been listening to a lot of economists and a lot of market analysts and so on. It's not going to happen likely before Christmas. Nobody's going to ruin Christmas, and nobody's going to ruin the year-end profits, especially after a 2-year pandemic. So we can expect it to happen anytime within the next few months in the new year. When that's going to happen? Who knows? January, February, March, April, May, June, who knows? Some people are saying it won't happen till June. Some people are saying it's going to happen sooner than later. I don't think the sky is falling right now, but I do think that we have to be prepared, right? So I doubt, personally, this is just my opinion, I doubt that it's going to happen right in January. I think maybe closer to February. I think maybe the U.S. government is going to allow the companies to report their earnings for the previous year and try and get some balance, let's say. Generally, the stock market in the last few years has taken a real dip in March because people report their earnings, or companies report their earnings January, February, March for the previous year, and then investors get all skittish and the stock market drops. It's going to be really interesting times to see. Anyway, my second piece of advice, and the thing that I'm doing this year, is do not overspend this holiday. One of the challenges that I have at Christmas time especially is I go all out decorating, and I go all out buying gifts and so on. The temptation is really big this year because many of North Americans have extra cash flow. We've been not spending as much. We've been not taking vacations. We've been not going out to restaurants. And that cash that's been sitting there now is being spent in the marketplace, mostly online. So that's a really big challenge. I know online buying is a challenge for me, so I gotta temper that. So my suggestion, my strong suggestion to you, my friends, is if you want more out of life and out of this challenge, don't overspend this holiday. Don't rack up the credit cards. Find other ways. I'm personally making a lot of my gifts this holiday so that I can keep some cash liquid and put it into my investments. And I've told my family, look, let's not go there. It's just not right, and who knows what the coming times next year are. So this is a prudent measure that you can make to really prepare yourself and prepare your family and make sure that you don't fall into high interest debt in the new year. So my plan is to keep some of my investments and cash liquid. So 10, 15, 20%, whatever it is that you have, just keep it ready to take full advantage when you can buy the dips or when the stock market crashes. Because here's the thing. In my case, I've been investing for the last 6 months, and there are certain stocks, for instance, that I know are not going to grow over the next 6 months before a potential crash. And so I have to look at it, make a plan and say, okay, at what is my target price? Where can I get out of this stock? If it's a loser stock, I'm going to take a loss. I don't have a lot of those, but I can tell you that in the very beginning, when I started investing, I kind of dipped my toe everywhere before I came up with a strategy. And I was so excited, I was like, oh my God, I'm investing in the stock market. Yay. So I just bought a few shares of this and a few shares of that and a few shares of this. And I just, whatever looked good, I was like throwing darts at a dartboard, Most of those paid off a little bit, but there's a few losers in there. So I'm liquidating my losers. I'll do another video on that. And I'm just going to take whatever I can out of them and keep that in cash so that when the stock market tanks, I can invest in the good stuff and make sure that I capitalize on the future gains. But I'm also taking some of my profits. I'm going to take some of my profits out of some of the stocks that did really, really well that I know are going to adjust or are going to drop a little bit. And I'm not really a day trader. I'm not a swing trader. I am a long-term investor. But at this time, knowing that there's going to be some market turbulence and knowing that there's going to be a crash, it is prudent to take some of your profits out. So that's what I'm doing. I have some stocks, I'll share some more with you later, that did really, really well. Maybe I got 25, 40% profit, and I won't sell them all, but I'll sell some so that I can create some liquid cash so that I can maximize the potential gains in the coming year. I highly recommend that you make yourself a plan and start researching. If you're new to the stock market and you haven't yet started investing, the first thing you want to do is just every week, every month, every paycheck, put 10 to 15% aside and just load it into your Wealthsimple or whatever it is that you're going to use to buy your stocks. Obviously, I use Wealthsimple because it's the low, no fee trading, and it's Canadian, and I just find it super easy to use. I can do my trades right in the palm of my hand. Anyway, you can see the link in my code if you want to sign up for Wealthsimple. But that said, just start putting a little bit of cash, even if it's your spare change. When I started, I was like literally putting spare change in a unicorn jar and saying, you know what, I want to save up for buying a certain stock. And that's one of the best things that you can do right now. And you don't have to buy right now, but just start putting that money aside and getting prepared, because that's how we take full advantage. So what you want to do is you want to pick a handful of stocks. A handful of stocks, do your research, study them, do that now. Just spend, 15, 20 minutes, 30 minutes, an hour a day, looking things up and doing your research and picking a price that makes sense for you. I always say to my friends, look, buy what you know or buy what you feel good about is going to be good in the future. For instance, I watch a lot of Netflix. I bought some Netflix. I'm always on Facebook. I bought some Facebook. These are companies that, they're FANG stocks, which I know are going to continue to grow, down economy, up economy, no matter what, right? FANG stocks are Facebook, Apple, Amazon, Netflix, and Google, right? They're super expensive stocks, but we can invest in them now with a new thing in Canada called a CDR, which is a Canada Deposit Registry. Anyway, only Canadians can do this. These are funds, bank funds that are tracked to a particular stock. So for instance, Facebook, Amazon, Netflix, Google have a CDR which you can invest in. So instead of spending $3,500 for an Amazon share or buying a fractional share of that stock, you can use a CDR and only spend $20, $25, let's say, and still that stock, the CDR will grow just like the stock does, and you'll see those gains and realize those gains just the same way. At least that's the theory. It's all brand new, and that's something that I'm now looking at and investigating and doing and buying into a little bit here and there. Anyway, that said, when you do your research, pick a handful of stocks. Don't pick a whole bunch. Put a bunch on your watch list if you want, but just pick a handful that you're going to do your research, and you're going to look to see how the prices reacted, especially during a market crash. Now, just about for every single stock that you could possibly have bought in the last couple of years, every single one of them, you're going to see a huge dip right at March 18th, 19th, 20th, 21st, 2020. Why? Because we went into lockdown, pandemic hit, everything went uncertain, and the stock market kind of went whoop, a big drop, and then it took off again. I went through all of my stocks. This is what I did. I'm going to show you. I got my trusty little notebook. Now, I do things in hand still. I know I should do it on a spreadsheet, but I got my trusty little notebook, and I made a list of all of my stocks, and I looked to see what the percentage drop was when that uncertainty hit, and when that, pandemic hit and everything went crazy. I went and looked and said, okay, look, Bell Canada dropped 22%. Amazon even dropped 21%. So the average drop, even for the solid blue chip stocks, was like around 20%, right? 20 to 25% even. And then some of the others saw dramatic drops. So some of the split share funds saw huge drops of like 40%, 50%. There was, for instance, even PayPal lost 26%. Wow. But even some of the stocks that I have invested in certain sectors lost like 48% in March 2020. And it just happened for like about a week, and then they took off again for the rest of the year and the following year. But that'll give you a really, really good indication as to, what could happen with the stock that you're interested in. So I made a list and I said, you know what? Here are my target prices for a potential crash, based on the 2008 crash or based on the March 2020 crash. And this is going to help me decide what value I'm willing to buy into when that happens, when and if that happens. So can you imagine, though, picking up your favorite stock at like a 40 to 45%, maybe even 50% discount, and then watching over the next couple of years as that stock continues to go back up to its previous highs? See, that's what a long-term investor does, right? And this, for me, is my retirement strategy. This is like the way that I'm going to set myself up and play catch up with my retirement. I'm going to take full advantage of this market downturn whenever it happens, and then reap the 40% or 50% reward over the next 3, 5, 10, 15 years. And if you pick your cards right and choose really good, safe stocks that you know are going to rebound, maybe in the short term, maybe in the long term, but if you're a long-term investor, you're holding on for 5 to 10 years, it doesn't matter, because you'll be able to realize those gains over time. And you'll realize even more gains if you're able to capitalize. Now, you'll hear people say there's no such thing as timing the market, and that's generally true. You're never going to buy at the super low, and you're never going to sell at the super high. And for me, I'm a long-term investor, so for the most part, I've talked about dollar cost averaging, and that's the best strategy to just keep buying in, except for right now. We've been hitting high highs, and we keep hitting high highs. I'm tempering my buys a little bit, because I know what goes up must come down, right? That's just inevitable. Analysts have been talking about a potential stock market crash for an entire year, because there's been so much money pumped into our economies, and we are in so much debt as countries, and interest rates have to go up. So there's no doubt the crash is coming. The question is when, and are you prepared? So my strategy for the year end, like I said, is taking profits, making my list, doing my research, picking my price. And that doesn't mean I'm not buying right now, because guess what? Like I said, this week, there's a lot of volatility happening. And so I am going to buy some dips, some of the stocks that I have the highest conviction in, and that I know I'm building my position long-term for the next 5, 10, 15 years. And I will buy those stocks as they go up and down before the end of the year, because some of them are just such bargains right now. I won't put all my money in. I'll keep some liquid so that if and when the stock market crashes, I can lower my average by buying the real bargain. So anyway, I'm expecting it to happen, and I'm not necessarily waiting, but for instance, I might buy a few shares now if it dips low, like Palentir did, my highest conviction, my stock that's going to set me for my retirement. It's a 10, 15 year buy for me, and I am holding it. But every time it dips, right now it's at a bargain around $20, $21. That's like a crazy bargain as far as I'm concerned. And yeah, it might dip lower to maybe $17 or $18, or maybe even lower during a market crash. And I'll just scoop up more when that happens. But in the meantime, I'm still buying a few shares every week because I'm trying to build my position. And I know I'm going to hold it for the next 10, 15 years and see how that stock surges. In my humble opinion, I said I was going to talk about some of the stocks that I have the highest confidence in and the ones that I am buying into and holding. Like I said, I'm liquidating a lot of my positions from now until, let's say, February, but I will hold on to those handful. And one of them is Palentir, PLTR. Palentir is one that I see as a huge bargain right now, and it plays in data. I encourage you to do your own research on it, but at the end of the day, it is my highest conviction stock. I feel buying Palentir now at like $20, $21, $22, $23 is a play for, it's almost as if you had bought Apple 20 years ago, right? Like if you had bought Apple 20 years ago, you'd be a millionaire, right? If you had bought Facebook even, when it first started, you'd be, see that price go crazy. Amazon, those who bought Amazon like 15 years ago, right? It's at $3,500. So this to me is the new oil, right? Data is the new oil, and it is the stock that I have the highest conviction in. Anyway, enough about my preaching. So that's it. Welcome to the More to Life channel. If you like this content or you want to join our community of friends, it's completely free. Don't buy anything. You don't have to subscribe to anything. You don't have to buy anything. Subscription on YouTube is absolutely free, and joining our group is absolutely free if you want to come along for the ride and get more to life. Bye, lovies.